Chicago O'Hare location to discuss my Go See It project on Wyndham Hotels and Resorts, which includes an analysis on the company's accounting policies and procedures as well as internal control procedures with a focus on the property, plant, and equipment. To offer some background, Wyndham Hotel and Resorts is a hotel chain headquartered in the United States with more than 9,000 locations across the world. It has locations in China, Mexico, Canada, the UK, and the Caribbean. Out of its 9,000 hotel locations, more than 8,700 of the locations are franchised. The primary purpose of Wyndham is to provide services in the form of accommodation and temporary overnight lodging. In addition, Wyndham Hotels' parent brand is also called Wyndham Worldwide Corporation, which is a publicly held corporation trading on the New York Stock Exchange. This means that it offers its shares to the public for sale. In fact, Wyndham Hotel and Resorts just declared its quarterly cash dividend last month of 29 cents per share on its common stock, payable to its shareholders at the end of this December. I chose this company as I have personal experience dealing with the brand, and I wanted to gain a greater understanding of how its internal policies work. According to Wyndham Hotel and Resorts' balance sheet, taken from the Wall Street Journal, the brand valued its net property, plant, and equipment account at $310 million US, with its gross property, plant, and equipment account valued at $701 million. Property, plant, and equipment is classified as Wyndham's fixed assets or non-current assets. Within this account, Wyndham has multiple sub-accounts, including its buildings, land and improvement, construction in progress, leases, computer software, equipment, and other property, plant, and equipment. Wyndham's quarterly net PPE actually declined from March to June, and then again from June to December of this past year, according to the cash flow statement taken from Google Focus. Wyndham's property and equipment is recorded at cost and presented net of accumulated depreciation and amortization, according to Wyndham's 2018 financial statement. Wyndham calculates the depreciation using the straight-line method over the lesser of the lease terms or the estimated useful life of the assets. In addition, it calculates the amortization of its leasehold improvements by utilizing the straight-line method as well. Wyndham considers a useful life to be 30 years for a building, 20 years for a leasehold improvement, and between 3 and 7 years for its furniture, fixtures, and equipment. Wyndham has also implemented various internal controls to protect itself by protecting these fixed assets and ensuring proper accounting procedures. For one, Wyndham has identified several risks that pose as a threat for its company, including operating costs and energy costs within its buildings, non-renewal or termination of lease agreements, the availability of financing to allow for the building of new hotels, and the quality of its buildings, in addition to the failure of franchisees to make the necessary improvements on Wyndham properties to maintain the quality. These are outlined in Wyndham's 2018 financial report. However, Wyndham believes that its internal controls to be successful overall, according to its manager's statement.